The Federal Reserve is set to meet this week and discuss yet another possible interest rate hike.
Yeah, it'll be a two-day meeting, and it follows Treasury Secretary Janet Yellen joining CBS News' Norah O'Donnell on 60 Minutes. During their discussion, Secretary Yellen predicted a significant reduction in inflation by the end of next year.
So I believe inflation will be lower. I am very hopeful that the labor market will remain quite healthy so that people can feel good about their finances and their personal economic situation.
But for families who are paying more at the grocery store, when 2023 comes around, do they need to be worried about a recession?
There are always risks of a recession. The economy remains prone to shocks.
Always risks of recession. Okay. Well, meanwhile, the CEO of J.P. Morgan Chase expressed more optimism about the U.S. potential for facing a recession while speaking with Margaret Brennan on Face the Nation.
The economy is going through a bunch of things, and we don't always really know whether you have a mild recession or hard recession. And if it happens, we're going to be fine. I feel terrible for people who lose jobs. We want to keep it as short as possible.
All right, let's bring in Kristin Myers for more on all of this. She's editor-in-chief at The Balance. Kristin, thank you very much for joining us. Even just those two sound bites were hard to parse for the average person. So if the Feds raise the rates, as I think is expected, what kind of number are we looking at, and what might that mean for our trajectory into a recession or not?
Okay, so what we essentially saw from Secretary Yellen, right, and then also from Jamie Dimon is that really no one truly knows if we're going to be able to avoid a recession or not. Now, here's what we do know and what we are expecting this week. Tomorrow, we're going to get the Consumer Price Index. That's CPI. That's a big inflation number. Markets are going to watch it. Investors are going to watch it. People at the Federal Reserve are going to be watching it. We are expecting a slight deceleration in inflation. Then on Wednesday, we have the Federal Reserve actually making a decision on rate hikes. Now, as you're mentioning, Tony, we are expecting that the central bank is going to raise rates again. Right now, markets seem to really think about a 75% chance that they're going to raise it by only 50 basis points. Now, if you're at home, you might think, I don't really know what that means. I don't really care. What's the difference between 75 basis points or 50 basis points? But really, it's going to impact you if you try to go get a loan, if you want to buy a car, you want to buy a house, you have credit card debt. The higher rates go, essentially the more expensive getting a loan is going to be, and also the more likely we are going to be headed to a recession.
And speaking of what affects people, in their daily lives, of course, everybody's thinking inflation. That has really, crippled just the economy and people's ability to live their lives. We heard from Secretary Yellen there that she said she hopes the inflation will be short-lived, but at the same time, talking about the end of next year. A whole year sounds really scary for a lot of people. What impact would a rate hike have on inflation in the immediate, longer term? What do you expect?
Yeah, Janet Yellen has been frequently more optimistic throughout the last year around inflation in general. And sometimes, unfortunately, her optimism was not always correct. But at least when it comes to rate hikes, unfortunately, it's one of the biggest tools that the Federal Reserve has. But it doesn't take effect immediately. We can hike rates, on Wednesday, and it's not going to impact inflation on Thursday. It's not even going to impact inflation by January or February or March. It takes a really long time for those rate hikes to really start taking effect. Now, we've had over 4 rate hikes so far this year, and we have seen inflation start to come down. But just keep in mind, right now, inflation is up over 7%. The Federal Reserve wants it at 2%. So that should just really tell you how far we really have to go. And that's why the Federal Reserve has been saying, listen, we're going to stay aggressive when it comes to hiking some of those rates. And that essentially means that they have to slam the brakes on the U.S. economy. And for anyone at home, that means higher unemployment. That means your pay raises might not be as high. It means you might lose your job. These are all things that the Federal Reserve, oddly enough, wants. The economy is boiling over. They have to take off the heat.
Right.
Got to keep in mind what also Secretary Yellen told Norah O'Donnell. It's leap people.
Yes, and at the end,
People.
at the end of the day, it's people. I mean, that was a very clear cut through of a lot of back and forth from officials. Kristin, thank you very much.
Thanks.